I am Ben Reppond. Today is September 18th, 2024. Welcome to my YouTube broadcast. I'm recording this on Monday, actually, the 16th, and it's being published on the 18th. As I sit here on the 16th, we're awaiting the announcement from the Federal Reserve regarding what they're going to do with interest rates. Are they going to drop them 0.5% or 0.25%? Doesn't sound like a really big deal, but the markets are waiting for it. And I think whatever they do and whatever comments they make will impact the markets positively or negatively, and we don't know at this point. But I would say that people think about the election that's coming up in a couple of months as being an impact. And what I've seen is that geopolitical politics, including elections, don't have that much to do with equity markets. Interest rates, jobs, earnings for sure, those are the things that affect equity markets. If there is a reaction positively or negatively to the equity markets from the election, my guess is it'll be short-lived and will quickly normalize and we'll move on. That's what I've seen so far. So, okay, I want to cover the dashboards and begin with this last week, and I'm going to show this. In the yellow box is last week, so you can see it was a very positive week, and you can see everything is green, including bonds. And to the right, you can see all of the dots. These are green dots, no red dots. So every index or ETF is above its 20, 50, 100, and 200-day moving average, including bonds, all of them. Interesting. So a very positive week. The pink box gives a year-to-date view, and again, everything is positive. Bonds are only up 1%, but they were negative, now they're positive. So the S&P is up 18%, NASDAQ 100 down 60 or up 16, and the Dow up 10, etc. So it's been a positive period of time for the equity markets, and it's basically at this point got positive momentum. So we'll see where that goes from here. Then I break down the sector, the indexes of the S&P 500 down to the sectors. There are 11 sectors in the S&P 500. 10 out of the 11 in the yellow box were positive last week. The 11th is energy, and energy was down. Well, why is energy down? The cost of a barrel of oil has dropped all the way down to $68 a barrel. That's the lowest it's been in 20 years. As price of oil goes down, energy stocks, and in this case, the energy ETF, tend to go down, and it was negative. And it is only up 2% for the year, the lowest of all of the sectors. Financials, consumer staples, industrials, those are at the top of the list on a year-to-date basis. Okay, this is a picture of the S&P 500 over a 24-month period of time. It's a line chart. It's a weekly line chart. And if it goes up, then the S&P went up that week. If it goes down, it went down that week. You can see generally the trajectory over a 24-month period of time is up. It certainly had periods where it was down, but it was more up than down. At the very end, so last week, a week ago, it went down, and last week was very negative. It went down, hit the 20-period moving average, and bounced off of that average and moved up. And you can see that to the very far right, the upper right of the chart. When I put this on an 18-month chart, candlestick chart, you can see those last 2 weeks. The last 2 weeks, one was red, which indicates it was going negative. And then this past week, it was a hollow candlestick, and which shows that it started low and went on up higher, almost engulfing the previous week. So again, that's very bullish. It's a bullish sign, but there were some down periods, but boy, looking at this for 18 months, it was mostly quite positive over that period of time. When I put the NASDAQ 100, tech-heavy NASDAQ 100, over the broad market, S&P 500, SPY, over a 24-month period line chart, it looks like this. So this is not as positive as the last two charts, but it's a relative strength chart. So you can see that the last move up on the very far right, that the NASDAQ 100 outperformed the S&P 500, but during a lot of this time, there was a lot of up and down, generally moving in an upward direction over 24 months, favoring large cap tech. When I separate the S&P 500 into growth and value, growth meaning most of that's tech-oriented, and value is more the old economy and financials. And you can see that, again, it's gone up, but I saw more the pattern of the last few months, and I put it on a black arrow, where it's actually going down. Even though it was up this last week, I see kind of a downward pattern in favoring value over growth. The S&P 500 has outperformed small cap stocks. And this last week, I don't know if you can see it or not, at the very far right of the chart, there's a little tiny tick down, which just slightly favors small cap over large cap. But you can see over this, I'd say it's about a 12, 13-month period of time, clearly moving in an upward direction, favoring large cap over small cap. The bonds, again, here's the pattern I see. Yes, over a 5-year period of time, the bond prices have come down, no question about it. And bond yields and interest rates have gone down. So they go down, price of bonds tends to go up. But I see the pattern here is in the last 5 or 6 months, since October of last year, clearly an short-term upward direction for the price of the long-term government bond. TLT is the ETF. The dollar this is a 3.5-year period of time. So over that period of time has generally gone up. Yes, there was a little bit of a tick down last week, but it's is it going to go further down? Of course, I don't know that, but generally the trajectory in the dollar is up. Gold, represented by the ETF GLD, had a very good week. This was probably the big winner for this past week. And you can see the move up at the very far right of the chart. That's the degree to which gold went up and hit a high for, I don't know how far back you have to go, but it definitely a intermediate term high. Silver, it's a rougher chart. It tends to go down more and tends to go up more. So not the clean pattern that gold is giving us. But if you look at it, again, at the intermediate term period of time, you can see, if I put it with black arrow, you can see the direction of silver clearly in an upward direction, and the last tick mark up at the very end, a very strong move up for silver, even more so than gold. Okay, next I want to show Bitcoin. Bitcoin has been in a downward direction for the past several months, about 6 months. It's gone up and down, but more down than up. So that's not a growth pattern for Bitcoin, but that's what Bitcoin does. It goes down quite a bit and it goes up quite a bit. But over that period of time, it's down. Now, this 24-month chart, so if you look over the 24 months, you can clearly see it's been in an upward direction, but the short-term direction is more down than up. Okay, volatility. The volatility index, because the market has been favorable I've shown you that. That pulls down volatility, so it tends to move in an inverse direction to equities. So equity risk has come down, equity prices have gone up. And you can see that to the very far right of the chart. You can see where, yes, it went up and down 2 or 3 times. The last move was down. That shows volatility is lowering, and and that's basically an indication. It's not good for equities necessarily. It doesn't lead equities, but it's an indication of equities. I put my red mark up there on my hypothetical level at 24, where when volatility moves up through that, it's a period of higher risk, and typically, and we're not there right now. This is Asbury 6. This is their 6 indicators. Last Friday, I showed this to you a week ago. Last Friday, all 6 were negative. So in the course of this week, with it being a positive week in the market, you can see that 5 of the 6 turned positive. The relative performance on assets, comparing one asset to another, I'll cover those. Those that hit in the last 3 columns, the last week, the last month, the last quarter, those that are cover those 3 time periods, small cap was more favorable than large cap. U.S. was more favorable than the emerging markets, and corporate bonds were more favorable than government bonds. The U.S. versus the world. So the U.S. is stronger than some countries, and there are 3 countries that are stronger than the U.S. for these time periods, last week, the last month, the last quarter. So those that are stronger than the U.S. are Spain, Malaysia, and Singapore. The U.S. is stronger in all 3 categories than France, the Eurozone, Japan, India, China, the Pacific, and the emerging markets. I use South Korea because this was the most consistent chart in one direction or the other, and it shows that the U.S. is stronger than South Korea since the beginning of 2023, so that's over a year and a half. Pretty consistently, it's going up and down, but pretty consistently moving in an upward direction. And then gold and silver, as I said, gold and silver both had very good weeks. As of this past Friday, September 13th, the price of gold went up 3.5% over the previous Friday, and silver went up 9.9%. So it's had these really big swings up and down, but currently over $30 for the spot price of silver. On top of that, you have to add the markup. The ratio is still 84-1 favoring gold over silver, but it makes silver actually a better buy with that kind of ratio. A monster box of silver. This is 500 generic rounds of silver. And that is now moved from around in the 14,000 range to over 16,000. And that includes a $1.36 markup on top of an ounce of silver. Now, each retailer is different. So this is numbers from my son. He's in that business, and he tells me what these are. And that comes down to $32.07 around an ounce. Now, so it was just over $30 for the spot price, but when you put the markup on it, it's over $32. Okay, thank you for watching. If you have questions or comments, leave them in the comment section below.